Gerd Kommer, the German ETF guru, is now talking about being a Bitcoin bull and that he's buying Bitcoin now. He was a guest in an interview with Mario Lochner and is talking about Bitcoin, explaining why he's convinced about it. Why he's not a Bitcoin enemy anymore, or why he was never a Bitcoin enemy. He has a really interesting market assessment that you definitely need to check out. But he also has a big warning about excessive Bitcoin hype, saying that you shouldn't get swept up in it, and that you shouldn't view the whole thing too religiously or in an overly maximalist way. That's especially interesting. And that you shouldn't view the whole thing too religiously or in an overly maximalist way. That's especially interesting. TradFire professionals are coming to Bitcoin, noticing Bitcoin's traction. Realize that you can't just overlook this asset class. Also notice that Bitcoin is getting more and more traction here. And now it's also clear that Bitcoin is part of every well-diversified portfolio. It has to be by now, or at least it should be discovered. More and more people are getting into this, with BlackRock now recommending a 2% Bitcoin allocation. And more folks from the traditional segment are at least taking a small position. Of course, Gerd Kommer isn't going all in on Bitcoin with 100% or anything like that, but at least small allocations are now the standard, and he even compares it to gold. He says that Bitcoin is something similar to gold. And that's definitely like a major endorsement for Bitcoin. We look at the ultimate bullish statements here from Gerd Kommer. I'm going to show you the whole section here. After that, I'll give you a little assessment. Because what's happening here? What's happening right now is that we're seeing a shift from the traditional financial market to Bitcoin. It's really intense, and of course, it's all due to the momentum that we're currently seeing. The current price rally, the hype that's building around Bitcoin. And of course, more and more people are jumping on the Bitcoin bandwagon. And of course, everyone is welcome, including Gerd Kommer and many others.
Last year, you said that Bitcoin might lose a bit of momentum, and you also had some people mocking that. According to the motto, whether the Bitcoin reaches the 1,000,000th, the dollar is doing. I think you're just pointing out that it's basically just a guessing game. Because we don't know if it's going to happen this year, next year, or whenever. When is it coming? They kind of twisted that negatively for you. But you actually don't have anything against Bitcoin. You've kind of become, you could almost say, little Bitcoin bull, huh? You're not opposed to having Bitcoin at all.
Exactly, I have. That's quite a question. I've invested in Bitcoin and Ether myself, not exactly millions. But I've invested and made a decent profit. I've never been a Bitcoin hater. I think I'm a very rational person, and I always find hype to be stupid. And in the Bitcoin fan community, there are also, I have to say, and I'm probably going to get a bit of a shitstorm, mini shitstorm. I have to live with that. There are just a few people who arguments. For example, Bitcoin will keep rising because of that. Because it's limited. Well, because it's limited to 21 million coins. That's wrong. Pebbles are also limited on this planet, but their value doesn't keep rising. Nobody invests in pebbles. Actually, everything on this planet. So, every kind of physical material is limited. What isn't limited is solar energy, like gigantic amounts of heat energy that shine down on this Earth every day. I mean, really massive amounts of energy pouring in. In that sense, the Earth isn't a closed system, is solar energy, like gigantic amounts of heat energy that shine down on this Earth every day. I mean, really massive amounts of energy pouring in. In that sense, the Earth isn't a closed system. But there are physically limited things on this planet. Almost everything. And that's why it should be derived from that. That's why the value should be rising. That's really fundamentally wrong, and especially the Bitcoin enthusiasts who often take Austrian economics, like the Austrian school, seriously. That I also consider very, very important, and I find it educational when you really look into it with this school of thought in agriculture or macroeconomics. Especially the Austrian school says that values and thus prices, so prices together, are completely subjective and arise only from supply and demand. And supply and demand, so if there's no demand, then it doesn't help neither. That the supply is scarce or limited. And so on.
What gives it value for you? Bitcoin value. Is it the same for you? You just say I want to do it once.
In gold, since Bitcoin doesn't produce cash flows, there's no objective method to determine the value of Bitcoin. Let's say, to appreciate a way of eating. That has to be derived from cash flow. This objective method, the discounted cash flow method, Bitcoin has, whether we like it or not, no significant commercial use so far. And, from my perspective, it's unlikely that Bitcoin, in terms of a means of payment or currency, outside of El Salvador, ever get such a commercial benefit will. I believe Bitcoin can very well, just like gold, which also doesn't have any significant commercial use. And since 1971, not anymore. The foundation of a currency is not a single currency in the world. And yet it's an asset, a legitimate asset that people invest money in. Not as attractive as stocks, but attractive. And this kind of, so to speak, could Bitcoin also become equivalent to gold? Just like art. Art has no commercial use, no industrial use. So, I can't get it in. It's not a commodity. I can't use it in machines. I can't eat it. It doesn't get me from A to B. And yet, you can even make money with art. And it will be similar with that. Could it be the same with Bitcoin in the future? And in that sense, I see Bitcoin as a legitimate investment. But you don't have to think that way right away. Bitcoin solves all the world's problems and brings about eternal world peace. That won't be the case.
What I also find an interesting fact is that Bitcoin is a world-renowned brand. So I believe brands also have value. And with Bitcoin, real money is being made these days, so Wall Street has noticed. It's actually maybe not so smart to fight against that, but we make ETFs, we make money from it, and when money is being made from it,
it definitely has value. Exactly, yeah. As the basis of a financial product, there are ETFs. And in particular, what was kind of a game changer for me, or maybe even more than just a small game changer, is that in January 2024, the SEC, Bitcoin, ETFs, or I should say ETFs, in the USA, has approved it. The largest and most important financial regulatory authority, and ultimately the American government, the largest and most important economy, and the largest and most important capital market have basically given it a sort of checkmark. I wouldn't call it a knight's move on Bitcoin. And that was really, really important. And the big banks, like JP Morgan from this world and others, like Deutsche Bank, blah, 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 they wouldn't just jump on this bandwagon. If the SEC hadn't given it that checkmark, and if the SEC hadn't given it that checkmark, and that has taken an incredible amount of political risk out of Bitcoin, regulatory risk. And in that sense, it was definitely a significant milestone, but I'm saying whether Bitcoin will be at $200,000 next year, the dollar stands, or someday like some do. Bitcoin maximalists say 500,000 or even more. That's written in the stars, but you're sticking with it for now.
So you see this as a risky investment?
I'm thinking that over very carefully. Both in terms of content and in terms of sizing. So if you buy a piece of art for 150 euros, some kind of print, a unique print of some artwork, okay, then you have a piece of art. But that's tied to risk. 150 euros, right? So I think about that carefully, and what I usually hold on to that for the long term and make a good return on it.
Very interesting and sometimes really good points here. From Gerd Kommer, I'll put it down below for you. The complete interview in full, then you can also watch the whole interview. Take a look. So there are a few things I don't completely agree with. We need to take a closer look at that now. So first, the first point, that was really interesting. That in the end, he says, the value of Bitcoin or the price increase doesn't just come from its scarcity. And that's really a good point. Because that's true. I mean, it needs more characteristics. How Bitcoin is limited here.
Bitcoin is absolutely limited here, and that really sets it apart. Bitcoin from all other goods.
But I actually believe that a very, very bad example has been chosen here. Because the main point he wants to make is that the increase in Bitcoin's price doesn't come solely from its scarcity. He says that a lot of Bitcoin maximalists just say, hey, okay, Bitcoin is limited, and that's why Bitcoin will keep rising forever. So I've seen relatively few people. Hey, okay, Bitcoin is limited, and that's why Bitcoin will keep rising forever. So I've seen relatively few people who have argued like that. Most of the time, there's some additional argument included. That means, for example, Bitcoin is limited, but it has other properties. Like that it's transportable, that it's verifiable, that it's censorship resistant, and so on. And that combination leads to the increase in value. And on top of that, we have the evasive fiat money system. And then we come to the conclusion that Bitcoin, measured in dollars, here, it will rise infinitely, or keep rising. But he actually makes the example with the pebbles here, and he says, yes, Bitcoin seems to be limited. That's why it always goes up. But pebbles are also limited, and pebbles don't always increase in value. But there is a really, really big difference here. That means if the pebbles become more attractive. So, for example, if people start buying more pebbles, what happens?
Then the price goes up first.
What happens next?
More pebbles are being mined.
That means the supply will simply be expanded here. And that just doesn't happen with Bitcoin. When the demand for Bitcoin goes up, then more Bitcoin can't be produced. Because here the supply is fixed. Algorithmically fixed and independent.
Here's the thing, whether a lot of people want to buy or just a few people want to buy.
And then the next part really comes into play here. And that's really the key part, that Bitcoin is absolutely limited here. And you can have an endless supply of pebbles. You can theoretically fly into space. Elon Musk can mine the whole Mars with pebbles for all I care. Or I don't know, on the moon or whatever, where there are pebbles everywhere in space. With technological progress, it will eventually be possible to mine pebbles at increasingly lower costs. And even if the demand goes up, you can probably still mine more pebbles even more easily. Because, let's say, the incentive is just higher there. And that's ultimately an important connection that you have to understand. What is very, very true here. That's basically it. However, is subjective also touches on the Austrian school. That's really, really good. Because, really, you can't say, for example, I don't know, like, here that sand is worthless, or that sand is super valuable, or something like that.
Everyone sees it pretty individually.
For example, if you absolutely need sand right now, and there's just no sand available, then you would pay a whole lot of money for sand. But if there's, for example, very, very little sand, but you don't really need any sand, then you wouldn't pay that much for it. It's the same with water. For example, look, I'm here in Paraguay, right by the beach. Well, it's not really a beach, it's actually a lakeshore. The water here is really dirty. So I wouldn't go in, and it's really very, very. Let's say, Brave, what the kids are doing here. The kids are swimming here, and there are also some caimans around. I heard that. So I was in here for a bit before, but they're not that far in either. I don't think anything's gonna happen here either, but it's definitely not that nice here. You can still see back here, seeing the city in association. For example, where I wanted to say now, a good example is always the water example. That means, for example, if I walk around here in the blazing heat for an hour, then it's really over 40 degrees at times. And now let's take it a step further. And let's say we're not walking at all. 1 hour through the desert here, if this were a desert, or maybe 2 days, or just 1 day or something. And then there's no shop or anything, and suddenly there's a shop there. And he says here, okay, the water costs 1,000 euros. Then I'd probably give him 1,000 euros, or even more, because my life depends on it. That means the value is really, really high for me at that moment, and that's subjective. And if I just have enough water when I'm in the city, when there are thousands of supermarkets, the supply is high and so on. So I don't pay that much for a bottle of water here because the value for me at that moment isn't that high subjectively. What he also says, which is interesting, is that there's no objective way to value Bitcoin. With stocks, of course, there is that. Cash flow methods, how you can backtrack the cash flow. And then you can somehow come up with a valuation or something like that. You don't really have that with Bitcoin because it's a commodity like gold. He also says here, it's comparable to gold. I wouldn't just say it's comparable to gold, but it's way better than gold because it has many more positive properties compared to gold. Because it's easier to transport, censorship resistant, scarce, limited, digital, whatever. We can find thousands of examples for that. Why Bitcoin is superior to gold here. And in my opinion, it will eventually surpass that here. it will inevitably surpass the gold market capitalization. But at least that's correct. That Bitcoin is more often compared to gold here. Like, for example, here with the stock. What's interesting here is that he says Bitcoin isn't as attractive as a stock. He probably meant MicroStrategy or Sendler Scientific. If he meant that, then I can totally see it. Because Sendler, Scientific, and MicroStrategy were some of the few stocks that have outperformed Bitcoin here. But when I talk about stocks in general and what they propose here, and here he says, Bitcoin isn't as attractive as a stock, then it's obviously, let's say, questionable when we just look at the performance. But I'd say, from his perspective, it's probably just a subjective truth. From my perspective, it's definitely questionable. But everyone can decide that for themselves. For some, holding stocks is better. For others, Bitcoin is better. I would definitely say that Bitcoin is superior to a stock here. No third-party war. There's no CO risk. You have a completely decentralized asset with an absolute limit. A stock can always be diluted further. You have a completely decentralized asset, an absolute limit. A stock can always be diluted further, which you see happening over and over again, and so on. So, I definitely see clear advantages here compared to a stock, even when we look at it from a long-term perspective. Which company has been around for a while? What do I know? Longer than 100 years. Bitcoin is made to last. That it can tend to exist for 100 years or even longer. So, with Bitcoin there is no such thing as an expiration date. At some point the business model of a stock breaks down. At some point a bad CEO comes to power. Or something like that can happen. And for something that's structured as decentralized as Bitcoin, that potentially can happen. What was also important was that they highlight this here, that there are no more regulatory hurdles. The SEC has given the green light. Regulations will be eased and take effect. In the inauguration, everything will probably be further strengthened, that the regulations will be eased, which will be able to take effect. Then he also talks about the Bitcoin price. Say that 5,000,000. The US dollar is in the stands. I don't know if that's really the case, but that's just my opinion. Not a question whether with Ken to 500,000. The dollar is rising. It's just a matter of time before it happens, whether in the next 3 years or maybe even 10 years. If it takes 5 years, it could happen this year. So that's the question you have to ask yourself. Bitcoin 500,000? Uncertain. Rises. That's actually the bottom line. I'll say you can never tell. A 100% chance. Because I mean, there are always black swan events, things you can't foresee. What do I know? Aliens might invade and stuff like that. But it's definitely very, very likely. Especially when we denominate everything in dollars and the dollar is really exploding here. Or saying it's exploding is an exaggeration. But if the dollar depreciates, then gold will eventually be at 200,000 or 300,000 or something like that. Or at ridiculously high prices. And then the only question that remains is, okay, when does that happen? And then I had the best tip right at the end. Buy and hold. And that applies to stocks. It applies to ETFs. It applies to Bitcoin. It applies to real estate. With buy and hold, you usually do the best. Some trading stories that are sold to you. That's always very, very difficult to really time the market. And that's also what you can really take away from Gerd Kommer. It doesn't matter if you say here, those are ETF people or whatever. Gerd Kommer really teaches that buy and hold brings the most returns. And he has a lot of statistics on that. He creates a lot of content about that for a really long time. He keeps saying, hey guys, don't just mess around with your money. Trading back and forth just empties your pockets. Instead, just buy something. Hold on to it for a really long time. Trading back and forth just empties your pockets. Instead, just buy something. Hold on to it for a really long time. Buy things that have value. Hold on to them for a really long time. It's best not to check your portfolio too often. And in the end, Bitcoin is the perfect asset. Where that works. That basically works, even with a world ETF or something like that. But in my opinion, Bitcoin is somewhat comparable to a world ETF, even though we don't have any economic productivity or stocks or whatever behind it. But we have a kind of commodity here, which of course, 24/7 global, traded everywhere around the world. And here, of course, there's already a certain level of antifragility, which you also want to build with ETFs or something like that. You want to build a certain level of antifragility. That means, for example, if a company goes under, the next one comes up, and if the CEO messes up, then another CEO comes in. And so you always have that safety net. You never really get the best returns, but you also don't get the worst returns. And with Bitcoin, you could say that the anti-fragility lies in the robustness of the Bitcoin networks, that it's built in a decentralized way, so that no one can stop it. So that no one can just flip the switch and shut it down. And with ETFs, you're basically trying to build in that robustness. by simply creating a market portfolio here. That's definitely a very interesting perspective here. If you want to buy some Bitcoin, I'll put a link down below for you. 21 Bitcoin, where you can easily buy Bitcoin. Here, with the code Bitcoin, you can still get up to 20% off the fees when buying Bitcoin. By the way, this isn't a bra, because people always write that. It's a bra nest, just a pocket in the back, like a backpack. Just where my shoes are.
Because I'm obviously walking around barefoot here. And by the way, I only have the shoes with me. Because the ground here is so hot in some places. Not here, of course, but in some places the ground is so hot
That you really can't walk around barefoot here. So folks, let me know in the comments below what you think about that. I'm signing off here from the very, very hot Perigly. It's just under 40 degrees here. See you later. See you later. Peace out.